want to take a look at two things today in our video. One is an equity peak. We have an equity peak in stock index swing as well as the 100K portfolio as of yesterday. Here is the equity curve performance summary for the last 2 years. 92 trades, nice average trade profit. You see the exit here. All three platforms captured this trade. Also want to take a look at the 100K portfolio. We're at an equity peak as well. Current drawdown at 0. You notice that there is a account size required is less than 40K, and this is with the NinjaTrader margins. And so we can almost cut the account size required when we use a broker that has lower margins for day trade strategies. And I want to show you the margin list. Here is the platform for NinjaTrader, the brokerage, where you can open up an account, trade with lower margins. You can research that here at NinjaTrader.com. That automatically goes to their brokerage. And so there's a platform and a NinjaTrader page. And here are the margins. When you plug those margins in, if you go to the margins tab at the bottom, you have the TradeStation margins and NinjaTrader margins. And you can copy and paste. And so what it is, I copied and paste those here. And you can see their capital requirement. You can also put the TradeStation margins back in like this. Copy and paste. You can see it's almost 75K. And then we'll go back and put the NinjaTrader margins in. Push Control C and then Control V, and you get lower margins. And so you see it's 40K. This number is actually smaller. You have to consider the fact that not all these systems trade at the same time. And definitively, DAX NinjaTrader and DAX Cobra money management algorithm version do not trade at the same time. DAX NinjaTrader closes all trades before DAX Cobra takes any trades. And so you could remove a DAX margin, day trade margin, which is about $4,600. And so once you remove that, you're down to 35K. And so you could trade this portfolio with 35K and potentially even less, since all these systems don't trade at the same time. But the minimum that I will recommend at this point would be 35K. You still have your same risk, 8180 drawdown. As it changes, your volatility as a percentage of your account will be larger. So when you make $1,000, it'll be about a 3%. And if you lose $1,000, it'll be minus 3%, versus if you have 100K on deposit, which is 1%. So you have to consider the psychological effects of a higher volatility as a percentage of your account size when you do this, but you can allocate less capital and have less capital in your futures account, and it offers you more leverage. And so you can use the capital for other things, and if you just have a higher risk tolerance. And so there, the results are still the same. You see, we were down for the month at minus 2,000. Now we're up at about 742, and so we've made a little bounce back here. There was a drawdown, another opportunity to get in on these drawdowns or add to positions, is add units or contracts to the portfolio. You can trade multiple contracts and multiply it accordingly. So that's the update for today, equity peaks and how to trade with less capital.